Hi there, it's Bill with Smart Trades, and it's Friday, December 10th, around 11:20 a.m. Um, Obviously, I was wrong on my call earlier this week for a top. We have since made new highs in the Nasdaq, the S&P, and the Russell. The Dow is yet to confirm, but it may yet make new highs as well. But again, my call earlier this week for a top obviously was wrong. Um, Here's a labeling, my new labeling of the S&P rally. I had previously labeled this as a wave 5 peak and the beginning of a change in trend to the downside. Obviously, that's incorrect. We have made new highs, and I was wrong. I think that this possibly still labels as a diagonal triangle. Diagonal triangles are very bearish patterns, and if indeed we break through the bottom of this wedge, we may yet see a change in trend, but at this point I would wait for that to occur before looking at the short side again. Here's the a little more pulled back view of the S&P cash, and again the breadth divergences and the potential fifth wave diagonal triangle wedge to the upside. Here's a chart I did earlier today of the Nasdaq. This shows the Nasdaq advanced decline line as well. One concern I have from the bearish perspective is that we haven't actually broken down. Even though we're getting these bearish divergences, we haven't actually had a break to the downside in breadth. Obviously, we haven't had the break in price either. So we shall see. At this point, we've broken out actually to the upside. This pattern obviously is triangular. Triangles tend to occur in fourth waves, and fourth waves are pre-termination patterns. That said, the $64,000 question is always what magnitude of termination are we looking at? And in my previous scenario, I was looking at obviously too small a degree for the ultimate change in trend. Here's the Dow chart. Now the Dow has not, again, made a new high yet. It's still locked in potentially a triangle pattern, or perhaps it's going to have a failure. We shall see. But the potential certainly exists for it to break out of this triangle and make one more moderate new high, even in a bearish scenario. Here's the Russell. Also had a triangle pattern. It's since broken out to the upside. It's up over 1% as I speak. Google still not confirming the move. Google is up today a bit, but way off its recent highs and not even close to confirming this up move in the broader market. Moreover, volume has been awful on the rally, so I do think that this is another bearish non-confirmation, but we shall see. Gold also nowhere near confirming this move. It has rallied a bit since this chart was printed, but still way off the previous high, and gold had led the way to the upside. So I think this is another possible indication that we've got a change in trend. The euro also nowhere near confirming the new highs. One possible explanation for that, perhaps we're seeing a decoupling of the dollar and the stock market, given the situation in Europe and so on and so forth. It's not impossible in my mind that you actually could see the dollar and stocks rally together. That said, this pattern in the euro on a short-term basis looks corrective to me. I think that, excuse me, I think that a breakout to the upside here could see at least a little bit of a rally, perhaps back up to this 135, 136 area. That previous congestion that we had. Again, the decline so far in the euro short term looks corrective. And finally, here indeed is the Dow chart, and you can see, our previous labeling of a 4-5, and from there, my 5 waves down, which obviously didn't pan out as a change in trend, and then a triangle. Now going one step further, this is the relabeling that I'm showing now. Again, we have a wave 5 up, a fifth wave up, as it were, of wave 3, and then perhaps this is a wave 4 triangle, which needs one more rally to complete the pattern. Anyway, hopefully we'll get back on track next week, and in the meantime, have a great weekend. Thanks for watching. Bye-bye.